Hello traders and welcome to another video review. Today is Friday, July 29th, 2022. Let's take a look at the Forex calendar first. What do we have here on the Forex calendar? The most important events of the day. German GDP, German unemployment change, and German GDP for the second quarter are all scheduled for release soon. And as you can see, we got the data from the German unemployment, 48,000 people, which is way better than the forecast of 15,000, so euro might be supported. The most important data during the London session is the CPI, Consumer Price Index from the Eurozone. This data are scheduled for release at 11 a.m. What is the expectations? 8.6%. What was the previous reading? 8.6%. So the market participants expect that the Consumer Price Index in the Eurozone will not change for the month of July. Alright, so any increase in the consumer price index will be highly negative for euro, and any decrease will be positive, of course. And during the New York session, we got data from Canada in form of the GDP. This data are scheduled for release 2:30, and the market participants expect that in May the forecast is minus 0.2%, which is way bigger decline from 0.3 than any other one. So please take a moment and wait for this data if you're trading Canadian dollar, because if there's any kind of a surprise, for example, bigger decline in GDP than minus 0.2%, the Canadian dollar might be in trouble. So this is the key event of the New York session, and those are the today's data for the Friday 29th of July 2022. Please remember, this is the last day of the trading on the Forex market, so the weekly close will be very important, and this is the last day of trading for the month of July, so the monthly close will be important as well. So let's find out what's going on the charts, and we are going to start with the US dollar index. The US dollars index keeps going lower. Right now the momentum is below the level of 50, and the US dollar index has dipped towards 105.51 level, which is below technical support at 105.84. There is another technical support available for the bulls, 105.02, which is 50 pips lower than the current daily low. So please be very focused when you trading the US dollar. Today this is very important level, because minus 3.88% from the top to the level of 105.02 is, and this would be the biggest correction during the whole uptrend. So this might be the overbalance price and time overbalance level. So let's find out what's going on the euro dollar because of the German and the Eurozone data. As you can see, the euro dollar doesn't want to rally that much in the recent days. We can see that we made the of course, on the daily time frame chart, we made the bullish engulfing. We made a nice bounce. Then of course, there was kind of a pin bar. However, the market is still trying to rally higher, but it can't go above this tight zone between 1.0234, 1.0279, so it's around 40 pips, 45 pips zone. The market can't get through it towards 61% of the Fibonacci retracement located at 1.0361. So please keep an eye on this level as well, and please keep an eye on how the wave C of the overall ABC correction is unfolding. This is the perfect target, target level for the wave C, of course. I'm talking about 61% of the Fibonacci retracement, and if broken, there is still open. There is another open road towards the higher levels. But first, we need to sort out the local technical resistances. So this is the euro dollar. Let's find out what is going on the US dollar versus the Canadian dollar. The US dollar versus the Canadian dollar is going lower ahead of the data. As you can see, we got the bearish engulfing, very important daily time frame chart pattern here, made just recently in the middle of the July, and now we broke above below the technical support at 1.2820, and it looks like we are below the 30 days moving average, and we might be going lower soon. The next important technical support is located at 1.2520. Okay, so this is 1.2520 technical support. Please be very careful when this market will accelerate to the downside, if it will accelerate to the downside, because the potential for the down move is really big. This is around 300 pips of the empty space without any support, without anything here. As you can see, we've been rallying for 4-5 days after the bounce from 1.2520. So this time we might go lower, go down even in one candle. Okay, 300 pips. Of course, it will be an abnormal move. However, it can still happen. Okay, please remember, weekly close and daily close. So how does it look like on the weekly anyway? This is the weekly time frame chart of the US dollar to the Canadian dollar, and as you can see, we got a big pin bar here on the weekly time frame chart. Then we have the confirmation, and then we have the continuation of the down move. So the level of 1.2520 is definitely in view of the best. So please be very careful trading this one. What do we should check next? I think we should check the SP500 index. Why? Let me just show you exactly why do you want to check the 500 index. There you go. We are approaching the key zone here, the key supply zone between 4,114 4,180. This is the supply zone, and if we break, if we won't break above this supply zone, then of course the down move might be continued. However, please notice the fact that we are developing the wave C, strong momentum, 65 points on the momentum. We need to hit the level of 4,100 in order to have a wave C 127% longer than wave A. Of course, that's another very important situation here, or even level of 4,233, where the 161% extension is located. If we break, then of course we can challenge the trend line here. This is the trend line from the top. Okay, we can challenge it. As you can see, it happened before, and of course the result of this challenge will be the key for the market. Let's just find out what is going on the crude oil at the end of our analysis. How are we doing here? Because we have a weekly close and monthly close. As you can see, market is bouncing up and down inside of this kind of a nice zone between 93.05 98.21. so it's like a 500 pip zone. The last low, the weekly and monthly low, was made at the level of 90.55. so this is the pin bar you can see here. However, we are still trading, as you can see, up and down. No real movement is being made on the crude oil. No real trend is being either continued or maybe just as I say, terminated. However, very interesting weekly candle. Last week we have definitely some sort of it's not a pin bar, but it looks like a very big upper shadow for this market. And then of course this bar, this week, this candle is supposed to be better, supposed to be different for the bulls than the last one. Well, it's just a small one, doesn't actually look that bullish. However, we are still green. So maybe next week we will start some bigger movements here on the crude oil. Right now we are hovering inside of the demand zone, just above the lows of 90.54. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.